Welcome back, champions. Another mind-boggling stock news. The property and casualty insurance industry is likely to benefit from better pricing, prudent underwriting, and exposure growth. Given an active catastrophe environment, the policy renewal rate should accelerate. Also, the increasing adoption of technology and the emergence of insurtech will help the industry players function smoothly. Though the industry is witnessing an increase in premium pricing, the magnitude has decreased in the last 12 quarters. Here are 5 property and casualty insurance stocks to add to your portfolio in 2024. Number 1. The Progressive Corporation. Based in Mayfield Village, OH, Progressive is one of the major auto insurers in the country. Better pricing, a compelling portfolio, leadership position, strengthened vehicle and property businesses, healthy policies in force, retention, and solid capital position poise this insurer well for growth. The consensus estimate for PGR's 2024 and 2025 earnings suggests 50.7% and 14.1% year-over-year growth, respectively. The consensus estimate for 2024 and 2025 has moved up 4.1% and 0.3%, respectively, in the past 7 days. The expected long-term earnings growth rate is pegged at 21.7%, better than the industry average of 11.9%. Number 2. Axis Capital Holdings Limited. Bermuda-based Axis Capital provides a broad range of specialty insurance and reinsurance solutions on a worldwide basis. Its compelling and diversified product portfolio, underwriting excellence, digital capabilities, and solid capital position poise this insurer well for growth. This insurer boasts one of the highest dividend yields among its peers and has raised its dividend for 18 consecutive years. The consensus estimate for Axis Capital's 2024 and 2025 earnings suggests 3.1% and 10.1% respective year-over-year growth. The consensus estimate for 2024 and 2025 has moved up 0.1% and 10.9%, respectively, in the past 30 days. Axis Capital's earnings surpassed estimates in each of the last 4 quarters, the average surprise being 102.57%. The expected long-term earnings growth rate is pegged at 5%. Number 3. Berkshire Hathaway. Omaha. NE-based Berkshire Hathaway owns more than 90 subsidiaries in insurance, railroads, utilities, manufacturing services, retail, and home building. It is one of the largest property and casualty insurance companies measured by premium volume. It should continue to benefit from its growing insurance business as well as manufacturing, service and retailing, and finance and financial product segments. Continued insurance business growth fuels an increase in float, drives earnings, and generates maximum return on equity. With Warren Buffett at its helm, Berkshire continues to create tremendous value for shareholders. The consensus estimate for 2024 and 2025 bottom line suggests a year-over-year increase of 7.7% and 15.3%, respectively. The consensus estimate for 2024 has moved up 1.8% in the past 30 days. The expected long-term earnings growth rate is 7%. Number 4. The Travelers Companies. Based in New York, this insurer provides a wide variety of property and casualty insurance and surety products and services to businesses, organizations, and individuals in the United States and select international markets. Strong renewal rate change, retention, increase in new business supported by a compelling portfolio and a solid capital position poised TRV well for growth. The company raised its dividend for the 19th consecutive year at a compound annual growth rate of 8% over that period. The consensus estimate for 2024 and 2025 earnings has moved 0.4% and 0.1% north respectively in the past 30 days. The consensus estimate for 2024 and 2025 earnings indicates a year-over-year improvement of 34.7% and 13.8%, respectively. The expected long-term earnings growth rate is 11.5%. Number 5. Chubb. Based in Zurich, Switzerland, Chubb is one of the world's largest providers of P&C insurance and reinsurance. It has diversified through acquisitions into many specialty lines and also provides specialized insurance products. This insurer is poised to benefit from its focus on capitalizing on the potential of middle-market businesses and strategic initiatives, which pave the way for long-term growth. Chubb has hiked dividends for the last 30 straight years. The consensus estimate for 2025 bottom line has moved 3 cents north in the past 30 days. The consensus estimate for 2025 earnings indicates an improvement of 10.5% year-over-year. The expected long-term earnings growth rate is 10%. Would you take this golden opportunity to invest in these stocks? Let us know in the comments.